All right. Hello, hello. This is Abel Pacheco, your host of the Five Talents podcast. We are super excited today get to bring to you another guest, Mr. Bill Exeter. How's it going, Bill?
It's going great. We're approaching Thanksgiving, so it's hard to be unhappy with that coming around the corner.
Turkey Day, baby. We're ready. We're excited over here and going to have too much turkey ham and gain some of this weight back on that I put off. So I'm excited. But if you don't know Bill, you're in for a treat. He is going to share some information, expertise, some advice, guidance on 1031 services and all around just, is an investor background, going to give us a couple of words of wisdom here. So we're excited to have him on the show, and we just really appreciate your time. So, Bill, you came recommended as one of those guests that can really share some knowledge and insight in this area. Let me pause for a second, turn it over to you. Tell us in your own words, who you are, what you do, and we'll just start a great conversation. Just tell us a little bit about yourself, brother.
Again, Bill Exeter. I've been doing financial services now for a little over 40 years, and that kind of includes some commercial banking, some savings and loan, but mostly 1031 exchanges, trust services like self-directed IRA, self-directed 401ks, title holding trust or land trust, things like that. Got into the business completely by accident. I was controller of a bank back in Los Angeles. And the chairman decided to start an exchange company and was advised not to have the escrow subsidiary run it. So they threw it at me. I had absolutely no idea what I was talking about or what that was. And a couple of months later, UCLA had a 2.5-day extension program on it. So I took that. And that was early 80s. And my career kind of did a left turn for the good. And now we've been doing really trust services and 1031 exchanges all that time. And we just try to be more consultative, more advisory in nature to help the clients through all the difficult issues that come up with 1031 exchanges and retirement accounts and things like that.
Oh, that's awesome. Well, I appreciate it. Thanks for giving us a little bit of insight and now sharing some wisdom and knowledge. So you mentioned a couple things. I want to dig into 1031. We want to dig in exchange. We want to talk about trust. We want to talk about some of the strategies, the tactics that people can use to invest in real estate. But even before that, now I'm sure you got one of those stories. How in the world did you become a 1031 exchange expert? What was your, did you grow up around real estate? Is it something you want to do? Just kind of fall into it? How did that happen, man? And walk us through.
Good question. It goes way back to where my family has always been accountants. I don't know if that's good or bad, but always come from the accounting background. Everyone else in the family are CPAs. I got my degree in accounting, a little bit of finance and tax on the side of that as well, but didn't want to be a CPA. From there, kind of got into banking, and the two kind of meshed. And I've always been fascinated with tax deferred, tax exclusion strategies. I mean, if you're going to work so hard and try to create your wealth, then you got to try to defer or exclude the taxes. And that helps you build the wealth even faster than if you paid the tax as you went along. And all of that kind of came together, and here I am.
Man, yeah, that's a background right there. When you're both of your parents were in numbers and then you started getting into numbers. So accounting degree in finance, that falls in line. Did you always love the numbers? Or did you just learn them and you practice, and then you did it so often that you ended up learning, loving the numbers? What do you think your mindset was on that?
Oh, definitely. That was who I was. I mean, from day one, I've always been drawn to the numbers and the technical side. I had a bookkeeping class when I forget 16, 17 years old in high school. I mean, I guess that makes me one of those sick puppies.
Well, you're definitely the individual that a lot of people need and want to partner with, because I've always heard that if you want to partner with someone, you need to partner with an opposite somewhere in your business. And one of those, if you love talking with people, you love being out there, you love shaking hands, networking, building relationships, that part of it, but need to know that somebody has their hands and their grasp around the numbers, the accounting, the finance side of it. Partner with someone else that's their 10 and your level 10 will come together and create a great partnership. So I'm sure you're never in low demand there for your services, Bill. Well, good deal,
It's
man. So, go
it's
ahead,
hard
sir.
to find somebody who kind of loves that tax side.
Yeah, brother. Okay, so understanding a little bit about 1031 exchanges. Let's start there.
Okay.
A 1031 exchange, I think for some people that have never heard of it, let's start at the basic, like in general, high level. What is it?
Okay. Well, it's really a tax deferral strategy. So an investor who owns rental investment or business use property can sell that. And when they do sell that, it's going to trigger your capital gain taxes, your depreciation recapture taxes. So a lot of people, sell and pay, and that's unfortunate. So if you do the 1031 exchange, when you sell, you actually defer those taxes. That means it keeps all the money in your pocket. Instead of writing a check to the federal government and the state government, you keep it all in your pocket. And that allows you to go out and reinvest in new replacement property. Much easier. It's much easier to trade up in value, buy larger property, more doors, more units, whatever that means to you. Hopefully increase your cash flow as long as you don't have to cut a check to the federal and state government. So it's all about keeping, deferring the taxes, keeping the money in your pocket, et cetera. And probably the basic example is a lot of folks, of course, start off with a single family. It's funny because some people do it intentionally and some people become an accidental landlord. But either way, you start off with a single family in a lot of cases. And at some point, you realize it's in your blood. You love doing that stuff, whatever it is, if it's a buy and hold or other strategy. And then you go to hopefully you talk to your accountant. Always talk to your accountant first and say, look, I'm ready to sell this and buy a duplex or a fourplex or whatever it might be. And that's when they'll give you the advice that, well, you're going to write a check. It's going to be a big number, but you can look at this 1031 exchange. So that's what it's all about, selling your property, reinvesting in something that makes more sense for you. It really needs to put you in a better position. If it's not, you shouldn't be doing it. And then only you can define what that better position means to you.
Okay. All right. I love it. Well, you said something, when we first opened up that caught my attention. If you're going to work hard and try to create wealth, and you're going to grind and you're going to put all your time, effort, and energy and all your resources into something, I don't want to just build something and not preserve or create the wealth, number one, but preserve the wealth. If I lose it all to the IRS and taxes, then man, what was the purpose of everything? So, that kind of reigned true. And then another part, it's, if you're going to make a move, you want to put yourself in a better position. You're going to take the next step in front of you. And what's the next best step? Well, unfortunately, Abel Pacheco can't tell you as an audience, what's your best next step. I don't know your personal position. I don't know about your cash flow or your tax implications. I don't know about all those things, but only you can define it. But once you've defined it, now you can start to think about strategies and tactics that'll help you take your next best step. And 1031 exchange is one of those avenues.
Absolutely, very, very true. And nowadays we get a lot of questions like, okay, we were in COVID, we're coming out of COVID, we're going into a recession. What should I do? If I sell today, I'm selling at the top of the market, but then I buy at the top of the market, et cetera. So it's all about repositioning. But you get a lot of folks who reposition for whatever meets their goals and objectives. And you're absolutely right. They have to define that. And it may be somebody who's selling, let's say, a C-class property and buying an A-class property. It may be somebody who's selling C-class and buying something they can value add. It may be somebody who's ready to get rid of the single family and go to multifamily. There's just lots of goals and objectives out there, and it really has to be defined by them as to what makes sense.
Yep. And at the bottom line, what I've heard about real estate, profit, capital gains, the whole business, entrepreneurship is, I want to accelerate my losses and defer my income, right? If I can accelerate my losses, meaning push all this depreciation up front and have my expenses, they're all accelerated, and defer my income or the gain, then I'm going to end up winning in the long run because I get to spend more before I'm taxed, which is it's a big mindset for if you're listening and you don't quite get that, rewind a couple times, and I think that's a key. That's what we're trying to do in real estate is we're trying to speed that thing up and slow the taxable side down. So,
absolutely. Yep.
yeah.
In fact, if you compare two families, one that every time they sell, they pay the tax and then reinvest, pay the tax, reinvest, to one that every time they sell, they do a 1031 exchange or some type of tax deferral strategy. And then you compare their net worth 40 years later, the family that does the tax deferral is by far going to have a much, much larger wealth, net worth than the family that just paid taxes as they went. It's going to be very, very different.
Yeah. The family that you mentioned, we talk to a lot of married couples. One of them is the high income earner. One of them is an entrepreneur. One of them is earning a good amount of whether W-2 salary or something along those lines. And the other is at home. And what we always tell them is, man, if you have somebody at home, someone at home needs to be a real estate professional. So that way we can offset taxable income on one side as a real estate professional to get a little extra bonuses. So if you guys are interested in that, ping me, call me. I'll be happy to kind of explain why. But Bill, from your purview, hey, you deal with a lot of clients and a lot of different asset classes, and they're trying to figure out the strategy and they come to you for advice. Who are the investors that are winning the most? Who are the ones that are, your top net worth clients, the clients that are making all the right moves over and over and over again? And who are they? And what the heck are they doing different than everyone else, man? Any
Sure.
of those nuggets would be amazing.
And of course, there's all sorts of different strategies. With the 1031 exchange, you, for the most part, focus on the buy and hold. And there's those people who I would refer to as the real estate collectors. They'll buy a single family and 30 years later, they still own it. And that may or may not be good. It just depends on your situation. But in a lot of cases, you get to the point where you've maximized your value, cash flow is not going to increase a whole lot more, whatever it might be. So those who really consistently always look at and evaluate their real estate portfolio, constantly looking for better deals, something that puts them in a better position. Those are the ones that typically do much, much better because they're always looking to reposition, readjust, and things like that. So it's those that are actively managing to really get out there. And then I think you get some who get to the point where it's like, okay, I'm done with that. I've built my net worth. Then you get into the position where you're really trying to maintain it or protect your wealth. You don't necessarily need to build it anymore. You just need to protect it. And that's where you get into more of the passive income. So you just say, look, I want the cash flow and I want more conservative investments. And I just don't want to take as much risk as I used to.
Yeah, that makes perfect sense. When you're younger, when you don't have net worth, I don't have a lot of, assets. I'm trying to collect them. I want to buy them, hold them, put them in my portfolio. I want to make sure that I have something to generate some cash flow, something to appreciate in value, and I'm willing to take some risk in the beginning. If I don't have anything, I was willing to take a risk. Now, as you start to hold a little bit more, the mindset of creating wealth versus preserving. Now, as preserving, I'm trying to take a little less risk. I don't want to take on as much in the beginning, at the end, as I was willing to in the beginning.
Yeah, exactly. Very, very true. And that's a big part of the 1031 exchange is, okay, I'm ready to transition my portfolio into something else, whatever that means to them. Yeah. And if you had to get killed in taxes, then it makes that whole transition either impossible or maybe doesn't make sense. But with the 1031 exchange, you can completely reposition your portfolio and pay zero taxes.
There we go, baby. Paying zero taxes is a big goal. Defer, kick them down the road. Let's go. Well, we have a lot of multifamily investors, Bill. We do a lot of multifamily. We talk a lot of multifamily. One of the big questions always, can I 1031 into one of your syndications? Because we do syndication. If you're a first-time listener, we basically buy something bigger than what we would have been able to buy on our own. We pull a lot of equity together from multiple different investors, limited partner, passive investors. We're part of the active general partner team. We go buy it, we go find it, analyze it, operate it, exit it, and our limited partners are passive. So everybody puts in 50, 100, sometimes $1 million into a larger opportunity. We pull all the capital together and go buy it. Now, for those that, the typical question that I get a lot of times is, can I 1031 into that syndication? So Bill, how does that work?
That's my favorite answer. It depends. Or if that doesn't work, then it's maybe. So first, we should probably define the issue. With the 1031 exchange, you own real estate. And when you are going to do a 1031 exchange, you're selling real estate. Therefore, you have to buy real estate. Now, a lot of folks look at the syndication and say, well, I am buying real estate. But technically, what you're buying in most cases is a partnership interest.
Yeah,
so a lot of these syndications today are set up as an LLC. You have multiple members buying in. And as such, it's treated or defaulted as a partnership. So what you're really investing in is a partnership interest. And the partnership or the LLC really owns the real estate. So that's kind of where the issue is. If you buy into that, what you're really buying is a partnership interest. That doesn't qualify as real property. Even though the partnership's buying real estate, you aren't. You're buying a partnership interest. Now, if we can somehow restructure that so that what you're buying is a direct interest in real estate, like a tenant in common, then it would qualify. So I think you had mentioned before we got started, like, if somebody comes in with $1 million, you're probably going to say, look, let's set up a tenant in common arrangement. We'll have the LLC for all the investors that come in with 50,000 or 100,000. And then the individual that comes in with $1 million would be a tenant in common with the partnership. So you really have two owners of real estate, the LLC with all the investors, except for the one larger investor. So something like that would certainly work. You also have the same issue on the flip side. And that's where we get probably more phone calls where they call up and say, I'm already in a syndication. I bought into it, 5-10 years ago. And now they're getting ready to go full cycle and sell. I want to do a 1031 exchange. And the challenge there is they're not selling real estate. The partnership is selling real estate, and they're going to get a cash distribution, which doesn't qualify for 1031 exchange treatment. But there are ways to fix that potentially. It probably depends on the size of the syndication. If there's 4, 5, 6 investors total, you can probably get everybody to work together, and probably some kind of a redemption agreement or something like that, drop out those who don't want to 1031 exchange. And there are lots of solutions there. The larger the syndication, the less likely you're going to be able to do anything. If you get a syndication with 40, 50, 60 people, it's just too risky and too complicated to try to fix that. So we really have to look at, what are you currently investing in? Are they willing to cooperate and all work together to help? And if yes, then maybe we can do something by restructuring the ownership today so that you do qualify for a 1031 exchange. So bottom line, it gets very complicated, and you need to have all your advisors ready to go.
Yep, it depends, right? I will tell you the common answer, and me and Bill were talking in advance, and I was like, "This is the most common question. This is my answer. How am I doing it?"
Awesome.
It's like, that's it. If you are trying to do 1031 into a multifamily syndication, and you're talking to us and say, can I put it in there? Typically I go, man, if you have $500 to $1 million, there's potential we could talk about it, because the tenant in common is the avenue you get in. So the experts will absolutely say, the same. You're not buying real estate, you're buying a partnership. And so unless you are a tenant in common, an owner there, and you talk to a qualified intermediary and set it up in advance, make sure all the things are buttoned up tight, you could be in a bad spot. So make sure you talk to a 1031 qualified intermediary in advance. And, if it's $500,000, $1 million or more, you're trying to 1031, call me. I'll definitely open to having the conversation.
Perfect. Yep.
So we'll take that, right, Bill? So on your side, Bill, what is tenant in common? What does that mean? Like, yeah, I think I understand enough, but pretend, just for a moment, for someone that doesn't understand the ownership and the structure, what does a tenant in common mean? What are the extra risks that they're taking as well?
And that's a good question, because we get a lot of people who call up and say, I don't quite know what that is. What kind of an entity is it, or how do I set one up? And it's not an entity. It's the way you hold legal title. So when you record the deed, it would be, like Bill Exeter as to an undivided 10% interest as a tenant in common, and et cetera. And you just list all the parties on the deed and each of their respective interests. And a tenant in common means that is your individual interest. So in my case, like I just said, if it's Bill Exeter as to an undivided 10% interest as a tenant in common, I own 10% of that property, it's undivided. If something happens to me, I pass on for whatever reason, that 10% becomes part of my estate. So the tenant in common means a couple of things. One is it's an individual interest. So when we sell, I can do anything I want to do. I can 1031 exchange out of it, just sell and cash out, pay the tax. There's a lot of options, but it also tells the state that when I die, what is going to happen to that interest, and it becomes part of my estate. You could have like joint tenants with right of survivorship or joint tenancy. There's all sorts of ways to hold a legal title. And most of those, even though they're treated as individual interests, it tells the state what to do if you pass on. So like you said, it's very important to talk to your advisors, make sure you're holding title the proper way. By far, in those cases, tenancy in common is probably the most common.
Got it. Okay. Sounds good. Yeah. And you want to talk to a pro. Here's what I really love about real estate. For somebody that's like myself, I'm not someone who loves, the IRS tax laws and the IRS implications. And I'm not somebody who enjoys it. I like taking advantage of the ones that I've learned about, but I don't necessarily like to dig into the IRS law. So what do? I partner with an expert. I partner with someone like, Bill Exeter to say, hey, man, what's going on? How can I win? What's the strategy? What do I do? And an expert lays it out for us. And then now we can make a good informed decision and move forward at the right time. Right. So that's what I love about real estate is I can partner with somebody who I know, like, trust, somebody who I deem as an expert and say, this is more information that I would ever be able to absorb in the next 10 to 15 years of my life or 20 years of my life. Let me just partner with the expert, and now I can make the right play, have them on my team, and we can all win together.
Absolutely. Everybody's got a little piece of the pie, and you need to bring them all together. It amazes me how many people will call us and say, no, I didn't talk to my CPA, or I don't want to talk to my CPA. Half an hour, 60-minute meeting is invaluable because you don't know what you don't know, and they can at least ask the right questions and figure things out. For example, some of your listeners probably make quite a bit of money. And if you make too much money, your adjusted gross income is too high, you may not be able to take all the write-offs that you would like to. So you have suspended activity losses. And those build up and build up and build up. So in some cases, you may not need to do a 1031 exchange because those suspended passive activity losses might offset your capital gain that's going to be triggered by the sale of property. Only your accountant is really going to know that. So you absolutely call your advisors first, make sure you know what you're looking at before you proceed.
Call your advisors. I love the technical part of it. You're talking to the technical advisor. If you don't understand adjusted gross income, you don't understand suspended losses, what we're just talking about, hit rewind, take some notes on and write down these terms, go, search for them, and then ask a professional what your implication is. Well, I have so many investors that are worried about capital gains taxes and they're talking about 1031. They don't realize they're sitting on all these passive losses or suspended losses they couldn't even use anyways. They could just sell their property outright, hit the capital gain button, and have no implication on their cash in hand because they had the losses already. If you don't talk to your expert, your CPA, somebody who knows your situation, you may be worried about something, frankly, that has no bearing on your personal situation whatsoever. But you got to talk to the pros. Got to talk to your pros.
Absolutely. Yeah, it amazes me too. There's so much stuff out there on the internet. I think that's a new professional term, stuff.
Stuff. Yeah,
but if you read it, it says, you
stuff on YouTube.
Trade equal up in value. You have to reinvest all your equity. You have to replace your debt. Well, they're telling you that because if you want to defer all your taxes, which most people do, you need to accomplish those. But what they never tell you is you can trade down in value. People call it a partial 1031 exchange. And for what you just mentioned, it may be you trade down on purpose, maybe by $50,000, specifically to use up a suspended passive activity loss. So Don't read what you see out there and just believe it. Always check with your advisors to make sure your situation is the same, or that there may be other things you can take advantage of.
There you go. All right. Well, on that note, Bill, for somebody that is trying to figure this stuff out right now, and they're looking for a 1031 pro, who do you want to reach out to you, and where should they go to get connected with you, your team, some resources? Where do they go?
Sure. We're happy to chat. We always sit down and you can brainstorm, bounce ideas off of us, or we always joke about it being strategery. So
strategery.
You can sort of take
That's another technical term. Strategery.
Yeah, that's another technical term. That's exactly right. So you can go to our website. We got a lot of articles out there that'll talk about all sorts of aspects of the 1031 exchange, and that's exeterco.com. So EXETERCO.com. We have a YouTube channel out there. It's the Exeter Companies. Go out to that. There's all sorts of recorded podcasts and seminars and webinars and things we've done. So there's a lot of verbal presentations, video presentations out there that you can listen to. You're always welcome to call me direct. I'm out of our San Diego headquarters, so my number here is 619-239-3091. So that's 619-239-3091. You can email me direct if you want as well. It's wexeter@exeterco.com. So WEXETER@EXETERCO.com. And that was a lot of E's.
There you go. Exeter. EXETER. Remember that one. I love it. Well, Bill, we could probably go on and on and on, literally, which is, if you're listening to the show and you go, there's more, there's like so much more. There's a ton more. We got to keep them in bite-sized chunks. And if you're somebody that's your eyes are glossing over as you're watching the screen, or you have a pen and a pad ready to take notes, and you're like, I don't understand anything these guys are talking about. In either of those camps, that's the reason you like an expert like Bill. Let's just say, hey, man, can you help me with this? I didn't understand, but I think I should be looking into it. Or if you're somebody who goes, I already understand, like, help me actually complete a transaction. Go reach out to them. Tell them you heard us on a show. I'd be blessed to hear that. And go leave us a review. Go ping Bill. Go reach out to his team. They're happy to be resources. I'm imagining Bill shows up on the show like this because you are providing some expertise, providing education, because you want people to contact you. This is not a burden for you, right, Bill?
True. Not a burden for us. Absolutely not.
This is part of what he does. So to take a moment, reach out to the team, and hopefully that helps you in your journey and your repositioning from your old portfolio to your new one, or potentially you're just trying to figure out the future and how to invest. That's awesome. Well, Bill, is there anything we haven't talked about that you were hoping to talk about? I just haven't asked you. Any words of wisdom, any insight? I want to make sure to honor you, respect your time as well. But man, anything you think we should be sharing that I didn't ask about?
Sure. Well, we kind of address it off and on throughout the chat. And that is your team. Get your team together. I can't stress highly enough how important it is having a team. And, if you're a newbie and you're just now getting started, or you're a seasoned investor, stuff happens. And you may have a phenomenal opportunity that drops in your lap and you have to close in just a very short period of time. You may have a property that you already own where something goes wrong. Well, whatever it is, you need your advisors ready to go so that whatever happens, you're ready. You know who to call and get some guidance. So, you want a legal expert who's hopefully an expert in real estate. Your CPA, if you're going to buy and hold and do exchanges, get us on the line so you know how to get in touch with us in an emergency. All the key people that really know, your settlement agent, title company, your real estate agents, etc. They're just important to have your team together so when something happens, you're ready to respond. There's so many people who don't do that, and then when something happens, they're not prepared.
Grab a team, man. That's the first piece of education that I paid for in real estate, and they harped on me the first weekend was, you got to build your team, got to build your team, got to build your team. And I did real estate kind of, I say on my own. I had some advisors, I had some mentors, I had some people that was guiding me through it. And the plays that we made that were right, the plays that we made that were really well and most successful was because somebody else was coaching me and guiding me and giving me some mentorship, and they were doing it for free. Well, when I say for free, they were getting paid for it, but just not out of my pocket in advance. It was like when a transaction closed, they won. When my mortgage banker, my realtor, the people at Todd, people that were helping me through the process, and I was asking questions. I was like, I wonder why they're so attentive and and helping me through this, because they wanted me to win. Because when we did a deal and we closed, they won too. And it took me a long time to kind of figure that part out. We paid for some education, and then they said, build your team, and I was like, oh yeah, the only reason I was successful at this point because I had some people helping me. So I would absolutely agree, Bill. That makes perfect sense, man.
Always money well spent.
Agreed. Well, I appreciate everyone's time. Again, I said we could go on to the topic for a while, and I think Bill and me are like-minded in this. It's like, oh, this is really fascinating stuff. But for some of you who just want to pay the pro, man, reach out. Let's chat, either us or Bill's team on some investments and how to maneuver. Happy to reach out to you. Happy to talk with you. Thank you for supporting the show. Go to our podcast, leave us a written review, like, subscribe, little feedback for us if you want us to change subjects or ask some certain questions, have some different people on the show. But we've been hitting about 30,000 downloads a month right now. You are absolutely I believe all of the reviews have been very positive, so I appreciate it. But if you guys have anything for us, let us know. And thank you for being a part of the show. Bill, appreciate it, brother.
My pleasure. Good seeing you.
All right, talk soon, everyone. See you on the next show.